Hello and welcome to today's video. Today I will be covering Bitcoin miners, or to be more exact, Bitcoin/high performance computing plays in the mining space. This video is made so I can recoup missed information as I stopped following them closely at the start of 2025. I am doing this to see if they may become interesting option again in the future. If you are looking for a solid investment broker, I personally use Interactive Brokers. They have a decent platform with great mobile app. Stocks, ETFs, options are just to name a few optionalities they offer, combined with low fees, of course. Use my link in the description of the video to earn up to $1,000 in their stock, while I get $200 per referral. So everyone wins. Now disclaimer. Before we start, disclaimer, nothing here is a financial advice. I'm just one person with a microphone. Always do your own research. Bitcoin miners first caught my attention in late 2023 as a proxy play on Bitcoin, a call that paid off very well. As prices moved significantly higher and volatility increased compared to 2023, my interest gradually faded, and I largely ignored the sector throughout 2025. In hindsight, that was likely a costly mistake. During that period, many miners became part of the broader AI-driven rally, repositioning themselves as providers of high-performance computing and AI infrastructure. In today's video, I take a fresh look at the most well-known Bitcoin miners that have transitioned into the HPC and AI space and assess their current standing. If we see a meaningful sell-off in 2026, I want to know which names could offer compelling opportunities when valuations reset. As of November, Marathon digital active hash rate stood at 60.4 exahash per second, with management guiding towards approximately 75 exahash by end of the year. Total Bitcoin holdings reached 52k, of which around 17k are loaned or actively managed as collateral. Bitcoin remains central to the company's strategy, viewed as a pristine store of value and a core balance sheet asset that provides strategic flexibility. At the same time, management believes that its operational expertise and infrastructure can be leveraged beyond Bitcoin mining, particularly in what they see as the next major growth phase centered around artificial intelligence. This strategic shift is supported by the planned acquisition of Xion, a company with deep expertise in AI workloads and private cloud operations. The rationale behind this move is clear. Both Bitcoin mining and AI compute are energy intensive, and Marathon is attempting to position itself as a vertically integrated infrastructure provider rather than a pure play miner. A key step in this direction is the company's effort to gain greater control over its energy inputs. This is reflected in the deal with MPLX, a company formed by Marathon Petroleum Corporation, which aims to pair lower-cost natural gas and renewable generation with advanced compute infrastructure. Marathon has already taken its first steps into high-performance computing by deploying AI inference racks and compute infrastructure at its Granbury site. Rather than building a few large centralized facilities, the company plans to develop multiple smaller AI inference data centers. This would primarily serve international customers, aligning with management's expectation that approximately 50% of total revenue could come from international operations by 2028. This approach suggests a long-term vision in which Marathon evolves into a globally distributed compute and energy infrastructure platform. That said, the capital structure remains an important factor to monitor. While the company holds a substantial amount of Bitcoin that can be used as collateral, this is accompanied by approximately $3.64 billion in debt and around $826 million in cash. Share dilution is also part of the story. Although the pace has slowed, the total share count increased significantly from 268 million in 2023 to 346 million during 2024, and in the latest report stands at roughly 378 million shares outstanding. This highlights the trade-off between funding expansion and preserving shareholders' value as Marathon navigates its transition from a Bitcoin miner towards a broader energy and compute infrastructure company. Also, stock-based compensation increased significantly in 2024 to 158 million, while latest results show 196 million in 2025 for now. On Cleanspark, so they have surpassed 50 exahash per second of deployed hash rate, with an additional 5 to 6 exahash scheduled to come online by the end of the first quarter of 2026. This continued expansion reinforced their position among the largest publicly listed Bitcoin miners, while also improving operating leverage as newer, more efficient machines are deployed. From a balance sheet perspective, the company remains relatively well capitalized. Current asset total approximately $1.2 billion when combining cash and Bitcoin holdings, while total liabilities stand near $1 billion. This provides a reasonable liquidity buffer and flexibility to support both operational needs and strategic investments. To fund its next phase of growth, the company secured $1.15 billion in convertible senior notes. A portion of this capital has already been deployed throughout a share repurchase program, resulting in the buyback of roughly 10% of the outstanding share count. The remaining proceeds are earmarked for expansion initiatives with a particular focus on artificial intelligence infrastructure and large-scale data center development, aligning capital allocation with long-term diversification goals beyond pure Bitcoin mining. I would categorize Riot Platforms as a second-tier Bitcoin miner currently operating at approximately 36 exahash per second for Bitcoin mining. While it does not sit at the very top of the sector in terms of sheer scale, it remains a meaningful player with a solid operational footprint. The company holds 19,000 Bitcoin on its balance sheet, of which roughly 3,000 Bitcoins are currently pledged as collateral. This treasury provides Riot with both downside protection during weaker market conditions and optionality for future financing or strategic deployment of capital. Beyond mining, Riot continues to diversify its revenue streams throughout its power strategy by actively participating in grid optimization programs. The company monetizes its flexible load and power infrastructure. In November alone, Riot received approximately $2.3 million in power credits, highlighting how energy management has become an increasingly important and recurring contributor to overall economics rather than a one-off benefit. Hut 8 currently controls 13,696 Bitcoin on its balance sheet. The company operates 1 megawatts of active energy capacity, supported by a substantial long-term development pipeline of 8.65 megawatts. Total deployed hash rate stands at 26.8 exahash per second, placing Hut 8 among the larger publicly traded mining operators. In addition, the company recently launched a $1 billion at-the-money offering, giving it a significant financial flexibility to fund expansion, infrastructure build-outs, or opportunistic investments. What makes Hut 8 particularly interesting is its strategic diversification of operations. The core Hut 8 entity is increasingly focused on AI and high-performance computing infrastructure, while its extension, American Bitcoin, is dedicated exclusively to Bitcoin mining. American Bitcoin operates as a pure-play miner, leasing power and space from Hut 8 rather than owning the infrastructure outright. This structure provides clearer operational separation, improves capital allocation efficiency, and strengthens Hut 8's positioning when pursuing future partnerships. Importantly, American Bitcoin serves as a first reference customer, helping validate Hut 8's infrastructure model and making it easier to attract additional third-party partners over time. That Bitcoin miners are capable of securing blockbuster long-duration infrastructure deals is clearly demonstrated by Cipher mining. The company recently signed a 15-year lease agreement with Amazon Web Services for its data center campus, which will be used to support AI workloads. This deal validates the strategic value of miner power and data center infrastructure well beyond traditional Bitcoin mining. In addition, Cipher has partnered with FluidStack, an AI infrastructure company whose expansion is backstopped by $1.4 billion commitment from Google. This partnership further strengthens demand visibility and underlines Cipher credibility as a long-term HPC infrastructure provider. As a result, Cipher is pivoting aggressively into the high-performance computing space, with approximately 67% of its operation now focused on AI and high-performance computing. To finance this transition, the company has also completed a $1.3 billion convertible note offering, providing substantial capital to scale AI infrastructure while maintaining balance sheet flexibility. Looking ahead, Cipher also has over 2.5 megawatts of planned development capacity slated for the coming years, giving it a long runway to expand AI and high-performance computing operations as demand for power-dense data center infrastructure continues to accelerate. Another standout was Terrawulf. The company is positioning itself for potentially more than $70 billion in long-term revenue, supported by over $5 billion in long-term financing to scale its high-performance computing platform. Much of this funding comes from convertible notes maturing in 2031 and 2032, underlining a long runway for expansion. Strategic names such as FluidStack and Google appearing again only reinforce the credibility of this build-out. Looking at the slide, their financing model is fairly clear and coherent on paper. The process starts by originating long-term leases with Tier 1 counterparties, locking in demand upfront. With those contracts in place, they de-risk the project throughout credit enhancement, mainly via Google-backed lease support, collateral packages, and completion guarantees. This structure allows them to obtain an agency credit rating and access institutional institutional-grade financing, after which they issue senior secured debt to fund construction and scale. Only then do they move into the build and delivery phase, replicating the model across new sites. What matters most is where the risk sits. Terrawulf is taking the largest upfront risk by building around a concentrated high-quality counterparty. If a partner like Google were to step away in the future, Google would barely feel it due to its diversified business, while Terrawulf would be far more exposed. That counterparty's concentration is the core risk of the model, even though the financing structure itself is well thought out and designed to be repeatable. Also to mention, their Bitcoin mining segment is relatively small compared to the peers discussed so far, with just 11 exahash per second currently in operation. The darling of this AI-driven run among miners, Iren, has clearly proven it deserves the attention it's receiving. Not only is it an early mover into the high-performance computing space, but it also operates one of the largest and most efficient Bitcoin mining fleets, powered by renewable energy. On the AI front, Iren secured a landmark $9.7 billion deal with Microsoft, alongside partnerships with Together AI, Fluidstack, and Fireworks AI. The company is targeting $3.4 billion in AI cloud annualized recurring revenue by the end of 2026, positioning itself as a leading hybrid of Bitcoin mining and AI infrastructure. Now on to Core Scientific. So this name generated a lot of noise throughout the year, from takeover rumors involving CoreWeave to the eventual failure to finalize a deal. Still, where there is a sustained noise, there is a usually real demand behind it. Providers of space and energy for AI workloads clearly emerged as one of the key areas of interest in 2025. The deal is still in place, so 10-year deal with CoreWeave, which will equal to less than $1 billion on a yearly basis of revenue. So Core Scientific reported around $15 billion in HPC revenue in the most recent quarter, showing that this pivot is already gaining traction. Bitcoin mining remains the largest part of the business for now, but the revenue mix is gradually shifting, and high-performance computing is positioned to play a much bigger role going forward. Hive Digital. So it's becoming increasingly clear that Bitcoin miners must expand into high-performance computing alongside mining, or risk being left behind. Hive is no exception. The company recently secured 25 exahash per second of mining capacity and continues to build out its high-performance computing business. Hive is developing Tier 3 data centers in Montreal, Canada and Sweden, with around 5,000 GPUs currently in operation supporting large language models related workloads. Tier 3 data centers are enterprise-grade facilities with built-in redundancy that allow continuous operation and maintenance without downtime, making them well suited for high-performance computing, AI and LLM workloads. Some miners are even shutting down Bitcoin mining altogether. Bit Digital is a notable example, pivoting toward becoming an Ethereum holding company with an AI focus. The company currently holds 150k Ethereum. While this offers potential exposure to Ethereum alongside AI, its HPC business is still in its early stages of development. And lastly, some closing thoughts. The move of Bitcoin miners into the AI and high-performance computing space was an idea many were skeptical about, myself included. At one point, even the Cleanspark CEO publicly stated that they did not see much sense in this type of diversification, arguing that miners could not realistically compete with giants such as Google or Amazon. Fast forward to today, and those same giants are renting space and equipment from the very miners they were supposed to beat. This is not about calling anyone out. We are all human and mistakes are part of the process, but it is important to recognize them and adapt. There are clear sector winners such as Iren, Cipher and Terrawulf, which acted as a first movers and were rewarded by securing multi-year, highly lucrative contracts. Others, including Marathon and Cleanspark, were late to the party, but as the saying goes, better late than never. Now that we have a clearer picture of where AI is heading, the demand side becomes obvious. Whether it's Tesla's robot ambitions, self-driving systems, humanoid robots or future automation, one thing is common across all of them: massive GPU compute requirements. And that is without even touching on fields like science, medicine and research, where AI adoption is only accelerating. In that context, it becomes clear that Bitcoin miners do have a meaningful place in this AI revolution. Still, debt issuance and dilution mechanisms are things to be wary of. When this is combined with Bitcoin mining itself, which acts as a direct hedge against currency debasement, it is easy to see why this sector has started to attract my attention again. Prices today are still too rich for my taste, but this analysis is not about chasing momentum. As mentioned at the beginning, it is about staying prepared. If a real opportunity presents itself, I want to be ready to act quickly, and hopefully some of you will find this overview useful as well. This is it for today's video. If you want full written dive on this topic, check my Substack. Also, for more daily insights and market updates, check my X account, and for more educational content, check my website. Like, subscribe as a sign of support, and see you in the next video.